This is a very relevant chart now to what's going on. All right, remember we were looking at this day before yesterday, and yesterday we have a cycle extreme on the daily. Very meaningful cycle extreme is really termination of the cycle. That cycle extreme, the last time it was actually occurring was in May 2021, and the cycle extreme occurred at that secular neckline that we're looking at, this gray dashed string big neckline. That was a cycle extreme. The market, of course, was still moving lower until it got consistent momentum. That is a positive plot on the 1 and 4 hours. At least a bit of a positive momentum on the 4 hours means there's termination at that point, and that leading diagonal has ended and the market takes off. Okay, so we'd expect the same now to recur. We have a cycle extreme. We have positive momentum on the 1 hour. Not very strong, but positive. We do not have positive momentum on the 4 hours. And therefore, we still expect some downward action. But the 4 hours is really becoming contained once we begin to have close to positive momentum on the 4 hours, or at least consistent degree 3 on the 1 hour. We know this means that this actual cycle extreme is about to be contained above oversold levels, right? And the relevant bounce then, right on that daily chart, really we expect it's going to be doing a second shoulder at least. Right, so that second shoulder comes in at the higher degree level 1 here on the daily chart. This comes in at 39,325. So we are going to be trading this move. We're looking at that second shoulder. We have, of course, a higher degree double head. It's still a bearish market because of the very negative momentum that you see on the daily chart. Do not lose focus of the overall higher degree cycle pattern. You cannot correct such a very strong cycle extreme by simply taking off from these current levels unless the fundamentals are on your side and doing a new head. It's impossible. Seriously. So what you can really expect is just go to 37,000, 36,900 below that internal level 1, or even high degree level 1, 38, 39,000. This becomes a very strong sell point, because at that point this cycle extreme is going to be rejecting around oversold levels to do maybe a cycle 5. Cycle 5 is another bear trend if the market will permit, if we're still bearish this equity close, right? So if it doesn't do cycle 5, it will do cycle B. Any such corrections for the momentum to become, I don't want to say even a bit positive, but bearable for the market to make a higher advance, then of course the move becomes an A and a B and a C. So you have an A and you have a B down before you have a C, and it is that last C that becomes a 5-wave swing. So even a wave B will do 50% of the whole move, and 50% of the whole move, even if you go all the way to 39,000, really gets you back to 33,000 and 32,000. So overall targets are going to be a second shoulder. You're looking at anywhere between 37,000 and 39,000. These are very strong sell zones. We do not want to get carried away into believing this is the terminal market bottom out, that the market is going to reverse at this point and go to 50,000s and 45,000s and these kind of lucrative levels. All right, let's move on to Ethereum. We'll just take a look at the daily momentum before we move on. So like we're saying, it is still very negative. This is still below oversold. We are at that lower neckline, right? We can of course expect the bounce just to level 1, if not even to 50% between the two. 50% of this neckline consolidation zone. This neckline consolidation zone should actually be measured from internal level 1, specifically that internal level 1, all the way down to the market bottoms. These appear to be the market bottoms. which is just a bit rough, and 50% line comes in at that 3.5, where it bounced and took off. Relevant, of course, so this is a 50% line you're looking at. Current correction, the guaranteed projections are 33,400. At that point, we expect a strong correction. Maybe this becomes the end of level 4 and we're still going to be doing level 5. It depends on the momentum picture at that point. Really, it depends very strongly at the internal and intermediate term cycles in momentum at that point. Are they all negative? Are they part negative, part positive? Are they doing degree threes? The momentum picture as a whole will feed a higher progression or a rejection.